Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 13th, 2020. It's a little after 1 o'clock Eastern Time as I'm starting the video, and what we're going to do is start out with a quick overview of the stock market. We'll look at some of the major index ETFs and futures, then do a quick update on gold and silver, and roll into a few, just not all, but a few of the commodities I'm watching. Continue to update those as long as the risk reward looks attractive. Time permitting, I want to hit on the cannabis stocks. I did an update on those a couple weeks ago, and I wanted to follow up there. And that'll probably be it if I get to those. If there's enough time in the video, I'll maybe touch on Bitcoin real quick. All right, so starting out with the stock market, probably the most significant event today is SPY has gapped above that multi-week trading range. It's been about almost a month exactly. We had gapped down on June 11th right there. And today's the 13th, so yeah, just over a month now of sideways trading, and we gapped up, which also takes us above that gap that we had. There was a significant gap technically because we gapped down from both below the trend line, that yellow primary uptrend line that's off the March lows, and the island cluster top as well right there. So there's no other way for me to spin it as bullish as long as it sticks. Now, as I made clear before, I put significant odds, well over 50%, that it'll fail. And this is from my experience. You have divergence. You have on the daily chart here, technically speaking, you don't have negative divergence until you equal or take out that previous high right there, and that was from June 8th right there, and the high was 323.41, so we haven't taken that out yet. But we're very close. So for all intents and purposes, you can see that here, the divergence line's down below. Here's your RSI divergence, and you have to stretch it out because the lines are flattening. There's your PPO divergence right there. Unconfirmed, need to cross over, bearish crossover, but we do have divergence on the 60-minute charts right now of SPY, also on ES, and I'll get to those in just a second. But again, take this as you want. I want to address this point. I answered this question. Somebody asked, hey, how come you're only putting up pullback targets and objective shorting entries? Well, that's not necessarily the case. On SPY, I mentioned, if you break above here, that's an objective long, and right now it is. If you're bullish, it's a breakout. Take it on face value until and unless it fails. We don't have a false breakout or anything like that. So there's a breakout. And maybe SPY will go on to burn through those divergences and continue to run. So that is, like I said, objective there. Objective long if you pull back to the bottom of the trading range. And you could say even objective long if you break above the previous high right there. Again, I put the odds on it failing only because of the reasons I said before. Overbought and with negative divergence, those breakouts usually fail. Not guaranteed. And what will do the trick? Well, zoom down to the 60-minute chart. The levels I'm watching right here, you can see that we do have on the 60-minute time frame already in place negative divergence right here, and we're also overbought. So you have overbought means you're above that 70 level on the RSI, just as you were overbought right here. And usually you get the first overbought reading. If you get a lower overbought reading, that's what gives you the negative divergence right there. And so there's your divergence lines. There's the breakout. It is above, like I said, the gap, the top of the gap right there, and close enough to that previous high right there. And if that's the case, you just bring over this line. That's what it would look like on the daily if you extend the divergence line. So, I'll probably add at this point an uptrend line. I think we can come in here. Let's see how it looks. If I can capture that low. Yeah, we can do that. I have something similar in the futures I'll get to in a second here. So let's maybe right there at the bottom capture a few more of those candlestick bodies right there. But that's it. So a breakout right now. Now let's talk about an objective long. If you went long on the breakout here, then a stop not too far below the where we gapped above. You can see this recent cluster of candles. You could put a tight stop and let the position run. or a stop below around anywhere from about 314 down to 311, I think makes sense. Now, let's talk about shorting. I mentioned this on Friday as an objective short entry, and I still maintain that it was and still is. I suspect that this breakout will fail. You could short right now. It would be an aggressive, certainly an aggressive short entry because you're shorting on a breakout. Contrary to TA 101, which says you go long on a breakout. Again, it'd be aggressive, and you'd certainly want to use a tighter stop than had you shorted the other day. But let's talk about that real quick, where an objective level would be. So if you're swinging down, if it all depends on your price target. If you shorted on Friday or any time last week as we were pushing up against that top of the trading range around 318, and you were targeting just one more move back down to the bottom of the range, I'm talking this box right here, you're talking about a 6.5% drop. So even using a 3-to-1 risk-reward ratio, you give yourself 2% on the stop, and that would give you a little bit more room, and that would offer an attractive 3-to-1 risk-reward ratio. You'd actually be, your stop would be a little bit above that previous high right there, around 322.72 or so. Now, if you were shorting, expecting a move back down into and then below the range, because at this point, if we get back into the range, remember that's going to be a false breakout. And so if that was your plan, and you're planning to hold it down to and waiting for a break or expecting a break of the bottom range, well, you can use a little bit larger stop. Maybe you're targeting a move down here to the bottom of the next trading range, or maybe much more. In which case, then you could allow for a little bit more upside. Maybe give a 3, 4, 5, 6% stop. Allow for a breakout to new highs. And then a reversal. That would still keep these daily divergences intact right there. So those are a lot of ways to trade. And again, we don't have on the Qs, we don't have any buy signals recently. That's what somebody asked. I guess they were referring to this. You go up every day. I don't see any type of continuation pattern here. On QQQ, we broke out, or we consolidate. We chopped around for a bit. And right here, pointed out 242 is a big level. That's why they were color coded, plus this uptrend line. So it said these blue lines need to go, and we never did. We held the 242 support on a daily closing basis and the uptrend line, and we've been going up each and every day. So it's an uptrend, but to me, it's just not one that's offering an objective entry point. Here's what QQQ looks like on the 60-minute chart. Let me flip over to this board here. I think this is the one I shared this morning. Same story. These going back the last couple months, you have a series of these divergent highs, and this is what I highlight. We're in an uptrend, and there's been no mistaking that. We've had these pullbacks. They've averaged about 5%. I measured out, and most of them were anywhere from 4 to 7%. Again, all these little divergent highs, watch, rinse, repeat kind of stuff. And so here's a divergent high, our most recent divergent high, last one since there. And you can see there's a little trend line below. There's also a little cluster. We gapped up today, so we'll see what happens tomorrow or the next day. Maybe there's a little island top to be made there. And there you have that trend line. And so you can look at these, come on fairly regular basis, these highs right here. It's almost, it's not perfect if you put in cycle lines, because this one's a little longer. I missed that. I was a little to the right there, but you can see what I'm doing. I'm trying to come down on those divergent highs right there and show you when they happen. And cycles have been getting a little bit longer lately, but you can see it's a fairly regular pattern of, these divergent highs, and they come about every, let's just measure it out here. This one, between this one and that one, it was about 14 days, 2 weeks. And that one to that one lasted about 15 days. This one to this one lasted 14 days. There it is. So you can see a fairly regular pattern. About every 2 weeks, you get these divergent highs. This one's a little on the long end now, going about 19 days right there. And that's it. And with all that being said, as I often say, divergence is not a sell signal. Sell signals come on either any type of candlestick reversal pattern, support level break, whether it's price support, trend line support. The best I can give you right now is this trend line here. But let's look at the futures real quick. That sometimes gives you a little more clarity on the charts. And that's because we're looking at trades that are virtually around the clock. So you have a lot more candles here. So here's what I see on NQ. We have divergence that's been building for a while now. These pretty much flatline divergence on the RSI and the PPO as prices are making higher highs. And again, I don't have anything. Maybe I don't want to force it. Put a little minor trend line right there. You'd probably pick that up better on the 1, 3, 5-minute charts, maybe the 10 or 15-minute chart. We're on a 60-minute chart here, but this is the best defined uptrend line I have. So maybe a break of that would at bare minimum take us back down to the bottom there. And what would that mean? That would be a drop of about 3% or so. And then if that broke, then we'd come on down to probably this 10,508 level. That's it. Other than that, we're in an uptrend, like I said, and not many or any sell signals right now on the cues at all. ES, the S&P 500 futures, here's what it looks like on the 60-minute chart. And, kind of the same thing. We have this small rising wedge pattern right here. You have an uptrend line, a little bit better defined than what I saw on NQ. There's your divergence line right there. Negative divergence, small divergence, but clear divergence right there. Last time we had divergent high, and this line's extended a little too long. It was right here. And it's not letting me move it. It can be a little quirky here. You have to grab the right exact point when it highlights, and I'm going to give up there. You can see the divergence, and that was the last correction there. And there was our last divergent low, which led to this rally. And last divergent high there before that, and we zigzagged down. Okay, and regarding gold, GLD, here's what we're looking at. This is a daily chart. If we go back a couple years, you can see that overall the trend is clearly bullish. And unlike the stock market, where you're still, I'm talking every single diversified index. QQQ doesn't fall into that category. You have SPY, Dow, Russell 2000, the mid caps. They're all still well off their previous all-time highs. One could argue whether it's a bear market rally or a new bull market, but on gold's at multi-year highs, so clearly in a bull market, zigzagging up, and along the way, even in bull markets, you have these corrections. You can look for divergent lows, and you can look for divergent highs, correction, divergent high, correction, another divergent high, correction, and we still have, at this point, the divergences continue to build. So from this point right here on the PPO, that's our divergent high. It's unconfirmed because the PPO is yet to make a bearish crossover to put in another a lower low. But it's worth watching. What I'm really looking at here is this trend line right here. It's a nice clean-up trend line on GLD. There's our recent multi-month trading range. That was from early April to the breakout right here in June, around mid to late June right there. And we've been walking up. So that's what it looks like on the daily chart. And for those in the official trade, gold's still a long trade since all the way back here, 139.12. We hit our first 3 targets, and we're getting very close to the 4th. But at this point, with those divergences, I'm still cautiously bullish on gold. And if these divergences weren't here, I'd feel a little bit better. But they are here, and there's a nice clean up trend line. So I think it's prudent at this point to tighten up stops. Depending on your trading plan, you might be holding this as a core holding, expecting to go a lot higher, and it might. But this is the final target, and has been for a while on the official trade, 172.55, and we're only about right now about 1.3, just over 1% below that target. So up to you how you're going to trade it, but we have that nice clean trend line, and I think that will trigger a correction, probably a pretty quick move since it's well defined if we break it. So you might want to tighten up stops and have it somewhat below that trend line there. Let's look at GC gold futures. And I've slightly modified this trend line. The last couple weeks I had it right here, but we had a few little whipsaws down through there, here, and here. So I think this is the better fit now, and I've dragged this trend line right there. And that's comparable to the uptrend line I just showed you on gold. So here's the story. Gold futures, same thing. They broke out. We had a multi-month trading range. It goes to the left of this chart, but it's bounded by these 2 yellow lines at about 1698, or we'll call that 1700, and about 1790, 1791 at the top. And so we had a little whipsaw through there, and then it broke out, and it's remained above that level so far, but we continue to diverge. The divergence lines have continued to expand in the last couple weeks, and so still leaning towards, again, cautiously near-term bullish, another thrust higher, hit that target, get out of gold, or tighten stops and let it ride if that's your thing, especially a long-term investor. But again, a break of this level could bring us down. If it brought us down, well, 1791 would normally be, and partly still is, in that area, the first objective pullback target. Maybe it would just want to break the test, or back test the breakout, I should say. But we've kind of sloppy, it's been sloppy moving through there recently. It's not a super well-defined level anymore. And just want to point out, so we could go on down through there. You can see some additional support levels if that does break. So let's for those of you still long, let's hope we get that one last thrust up. I can certainly say this, I don't think it's very objective to add to it. Now, it is a breakout. We did break out above the recent trading range, so the same case you can make in SPY for going long, you could make in gold, that it broke out of a multi-month consolidation range. At least it was multi-month in gold, about 1 month in SPY. But again, with the divergences and overbought conditions, that it decreases the chances that we're going to continue to rally substantially from here. At least without a pullback to maybe come in and back test that level, and work out, burn off those divergences. Here's the 60-minute chart of SI silver futures. Continues to walk up this trend line. That's the uptrend line to watch. It's started to move away recently. Small potential divergence. Again, not confirmed. See, this PPO is a momentum indicator, and it's pointed straight up right now. And so if it goes up much more, it takes out that previous high, and then we no longer have divergence. Same with the RSI there. So potential divergence, again, something to watch. But it's been moving up because gold broke out recently, so it's rallying right along there with it. And on SLV, if you trade the ETFs, we had that breakout right there. Big green candle through there. That was your breakout candle right there, and it's been moving higher since, taking out that previous high right there. We do have now divergence. So what I'm going to do is add a divergence line right there. Like gold, we now have negative divergence on the daily. Before, silver was lagging behind. So that's it. I'm going to point those out. I'm not going to get into the dollar or euro right now. I wanted to kind of do an all-inclusive video, all-inclusive about some of the different things I'm watching. Let's roll into a few commodities and we'll wrap this up. NIB is one that looks attractive right now. Offering an objective entry. Let me color this line up. I know there's 1,000 lines on this chart. It's very busy. Let's make it a bright color so you can see. So there's the uptrend line here. In fact, I can turn off all those levels and just draw it out for you. We have a low right here back in, look like April of 2017, and this is a cocoa ETF. So there's been numerous opportunities since there to step in long, and some of the rallies have been bigger than others, obviously. But this one, even there, if you bought at this one and just held as a trend trader, it's been zigzagging higher since. This is the first time since back here that trend line's been visited. So it's objective, and also you can see here, I'm going to draw it out before I turn those lines back on. Not only did we hit trend line support, but we did it with bullish divergence in place. So there's a case for more of a trend trade, I think, than just a simple swing trade, or at least a multi-week, possibly multi-month swing trade like you had back here and like you had back here. So that's one of my favorites right now, and that's Cocoa. NIB is the ETN if you don't trade futures, and if you do trade futures, CC is the contract. And right there you can see nice big bullish divergence that's been building for a while, at least on the RSI for a while. Here you have it on the PPO, and then boom, you had a little minor downtrend line there, and it broke out, and it's been moving higher since. So I don't see much stopping it until 2209. It's a pretty decent resistance, so a little more upside. And at this point, what you might want to do, again, now long-term traders, I just showed you, we just successfully tested and held and reversed off that long-term trend line on NIB. So, if you're not trying to micro time your trades, I like to use the 60-minute charts to hone in on objective entries and exits. You could take a partial position here, even a full position with a stop somewhat below that trend line that I showed you a minute ago on the NIB daily chart. Now, as far as more active trader, well, there's a little bit of upside before you hit resistance, so not the most objective time to buy. If you get that and you get a pullback, had support here about 2117. Any pullback to that level should be objective. There's some minor support just below there as well, or a breakout above 2209. Ideally, after a little reaction off that level. And that would probably open the door to the next target there. There'd probably be a few stops along the way, but that'd probably be the next swing target up there, about 2305. And wheat is an official active trade, and that one just recently hit our first target here, and got checked as expected. There was a little downtrend line, so expected a reaction on the initial tag of that level, and that's exactly what happened. So at this point, wheat is offering an objective entry on a pullback to near that first target level, which was already hit. Remember, wheat's coming off a divergent low just like it was back here, and just like it was right here. You had these swing trade opportunities back then, and so I'm looking for something like this. Now it could pull back more. I'll give you another level if it does, right about here. That call it 511-ish. See that reaction high, quite a few reactions when I go back in time, but most recently a major reaction low right there and a reaction high right here. So that would be also, if we don't bounce off somewhere around here soon, maybe pull back to 511 as the next objective entry, especially for those that might have booked profits at T1 or on the tag of this trend line looking to recycle back in. But these remain the final target, or the next targets, I should say. And like a lot of these commodities, these are potential bottoming plays. So should the commodities arena, the agricultural commodities arena, start to firm up the charts, then I may add additional targets on this one. For futures traders, ZW, that's the contract for wheat. We came very, very close to my 541 next target up there at 541 and a half or so. In doing so, we had a divergent high. Now we could still thrust up. Here's the thing: we have support here at 520. That was the last target, which was already hit. So maybe a pullback to that 520 level. Be nice to see that hold. Maybe get another thrust up to then extend the divergence and get another pullback there. That's still the next target, 541, 541.50 or so, and any pullback to that level, or this 508 level, 508.246, that's now support, would offer objective entries or add-ons to a position on wheat. And of course, then a solid break above 541.50, maybe we'll call it 542, would be bullish and probably open the door for the next leg up. Next up, sugar. Sugar has been consolidating. We had on the last official trade, it would hit that first target here, about 37 resistance. That was at reaction low as well. And so that resistance, once taken out, as it was here, becomes support. So that's the story with sugar. It's been kind of consolidating above that support level. And, if it breaks it, probably come back down here, that 34.82 level, but still the longer term chart looks constructive on sugar, and so I still favor a move up to that next target there. Ultimately, whether we go down a little first or not, or hold support here, roughly 40.50, and then all the way up here to that 47 target there. That's what it looks like on the ETN. As far as the futures go, SB, that's your ticker for the sugar futures. We have coming up on support here about 1143 right there on SB, and you had a little downtrend line here. We've been consolidating. It's that comparable consolidation zone that I just showed you on SGG, the ETN, and so it's objective here to go long with a stop somewhat below there, or breakout above the top of this recent trading range would be your next objective entry. Other than that, JJG I've been highlighting recently as one of the, an alternative if one size fits all. If you want to trade these these grains: corn, soybeans, and wheat. We had a nice impulsive breakout buy signal there. It rallied up from the breakout point. That was about a good for 4 or 5% rally almost to that 4160 target. Resistance level as expected, pull back off the initial tag of resistance and target. That's why you have these levels there, and it should ideally hold up here. There's you can see the recent candles. 1, 2, 3. There's numerous candles right there and some candles back there and there. So this is an objective re-entry point here. If it breaks that level, your next objective entry would be on a back test of the trend line. If it can reverse here, that's all the better. It's more bullish that the buyers can step in here. And then so an objective long right now with your next objective long entry on a break above the recent highs or that 4160 level. And there's your next swing target up there, about 4350. And then about the 46 level. And then finally, Joe Coffee still looks good. We had a breakout right there. We had the bullish falling wedge pattern and the downtrend line right there with divergence that's been building right here on the down on the indicators below. Big divergence. We had a small divergent low right here, back here, and that led to this strong pop. The coffee tends to run fast at times. Sometimes you zigzag higher like you did here with corrections. Sometimes you just explode higher. It all depends, and you can see, but there's usually in a primary trend you're going to have these waves. You're going to have pullbacks. So this is a breakout. We hit that, stalled and ran into and slightly exceeded that R1. That means resistance, first resistance level. I'll add those sometimes in lieu of T1. I didn't put that as a first target because there just wasn't enough meat on the bone. It wasn't worth taking profits there, in my opinion. Percentage gains weren't enough, so we pulled back, and the divergences, again, the breakout's still intact. So the ideal scenario would be to see coffee move up. Now I can't make a case for a hard case for an objective entry here because I don't see a very solid, well-defined support level. Unfortunately, the downtrend line, if we are going to go and backtest, is too far below. Just not comfortable with that, and so I'm leaving a stop there on a daily close below 29.10 because it would probably have to take, would have to take that level out to backtest the trend line unless it did it like right away, and that's not going to happen. So anyway, still looks good. First target remains 32.77, then 33.55, and if that if it starts to move up that way, and I see momentum in the some of the other ag commodities, I may very well add additional targets. I could tell you right now the next target would be up here. I'm going to give you a line right there around, give or take, that 40.70 level. You have a reaction high, major reaction high right here, big old gap plus numerous reactions right there. So that's a potential. Let me just write it in now, so remember to do that on the next update. Potential T3. And potential, it all depends on how the charts develop going forward. Okay, so in a few minutes I'll just hit on Bitcoin. Bitcoin, I've highlighted on and off in recent, I actually highlight over the years, I highlight Bitcoin every now and then, especially when there's some development. So the bigger picture is we had a downtrend line. I'm using the proxy here, GBTC. It's similar to an ETF, closed-end fund that tracks the price of Bitcoin. BRR, the futures, I'll watch those as well. So the thing is, you had a rejection here. You had a trend line with numerous reactions here. Along the way, we were rejected here recently off the trend line, and we also had this small wedge type pattern with negative divergence. So we had a sell signal. When you zoom in here, there was our sell signal recently, that big red candle right here, your breakdown candle. If I can grab my box tool, show you that. And we've been stair-stepping lower since, and we're in basically a bearish technical posture because we had support here. I had a support level at about 10, we'll call it. Sometimes this one rounds off to the nearest thousand, so if I go up and down, it'll snap to 10.10. There we go. That's resistance right there. Maybe some, sort of seems like a little bit of consolidation here. It's a little bit of sloppy range. I don't want to force these trend lines, but a breakdown through there will probably bring us down to the next target. So, bullish if we can recover 10.10, although not screaming bullish. It's a kind of a sloppy level, and bearish if we break that trend line. Next target about 883, and the trades to watch for that is Overstock is one of my what I call my Bitcoin proxies because it tends to trade often in line with Bitcoin, and it's putting in a big divergent high. It's stretching the divergences, but they're still intact, and it's made what I believe to be a momentum-fueled overshoot through here. So if we get any more downside in Bitcoin, or even if Bitcoin doesn't start to rally soon, I expect this will fail. So I'm going to go out and say it. I think it's very aggressive and speculative. It'd be like shorting the Qs right now, but I think it'll work. You have a previous reaction right here we're at. Traders look at that. In fact, I could take that line to the left and I see other reactions. So you're at resistance, and I think this right here, I had that 42.41 resistance. I think that's a momentum-fueled overshoot. And the thing is, this one moves quick. So it's all about risk-reward. It's an aggressive trade. Don't put a lot into it, but if it pans out, I think at minimum we're going to pull back here to that 30 level in the uptrend line, right where my crosshairs are. That'd be a 38% drop from where we're at right now. And so if you look targeting 38%, a 10% stop loss would be about a 4-to-1 risk reward ratio, which is excellent. You can use a tighter stop, 8%. I can tell you, I've traded overstock quite a bit. If you use a 2-3% stop, they're probably going to get you. So it's up to you. You could certainly take that shot here. I prefer a little bit wider stop, maybe 5-6%. And that still gives you an excellent RR if you're targeting a pullback to that 30 level. So that is, like I said, somewhat contingent on Bitcoin moving lower, but not completely, because Bitcoin has already been moving lower, like I said, with overstock going the other way, and that's unusual. The other one is Riot, or I have a few Bitcoin proxies. There was Riot. I mentioned that one also as an objective short there, the $3 resistance. You had a divergent high, and these little suckers move so far from that divergent high to the recent lows. It dropped about 38%, right about what I showed you I'm looking for on overstock. And at this point in time, we're flirting with this trend line. We're a hair below it, but I'm going to pull it down here. That's not really an impulsive breakdown. Plus, you have support below at 209. Be careful shorting low price stocks. But again, the key is you don't short a big position in something like this, something that can drop 38% in just a couple days. I mean, from that divergent high, that's what it did. Their 38% drop happened in three candles really after the top, and this 1, 2, 3 right there after the top was in, although the reversal started that day. So that kind of gives you an idea just how much this thing can move. All right, I'm going to wrap it up here. So there it is, some trade ideas, some things to watch in the market, and if anything else stands out, oh yeah, it does. I'm going to get to, in a separate video, I'll do an update on the cannabis stocks. There's some things to note there as well. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.